Then for the last question, which is B4-34, consolidation worksheet at the end of second year ownership, which is the continuation from the previous question. So the data will be the same with the previous question, only that we have another information that no additional impairment occurred in 2009. So we are given again the trial balance of the two companies, okay, on December 31st, 2009. We are asked again, A, do all of the elimination entries, and then B, prepare the three-part consolidation worksheet, and then C, we are asked to prepare a consolidated balance sheet, income statement, and retained earnings statement for 2009. So the procedures will be the same with the previous questions. Again, the thing that is different is only the income and the dividends. Okay. If you want to do the book value calculation first, is okay. It will be clearer for you. Okay. So the basic elimination entry, the debit common stock, debit retained earnings, you can directly take it from the trial balance. Okay. And then income from roller, which is 36,000. Okay. So it is you can take it from the sales, you minus all of the COGS until other expenses, you will get 36,000. Okay. And then dividends declared is 20,000. Okay. And then investment in roller, so you can plus the income, you minus the dividends and minus the amortization also. Okay. So you'll get $124,000. And then we have amortized differential reclassification entry. So there is no goodwill impairment loss already, so what is left is only the depreciation expense of the buildings and equipment. Okay, so debit depreciation expense, credit income from roller 2000. And then we have the differential reclassification entry. Again, this is the ending balance of the differential of the net assets of the company. Okay, so buildings and equipment will be always the same, the goodwill will be the same because no impairment. What is different is the only accumulated depreciation, which is increased by 2,000. Okay, and then our investment will less 2,000 than previous year. Okay, because we have recorded the depreciation expense. And then we have the optional accumulated depreciation entry. So after we have done, we can go to the worksheet. Okay, so you just directly move all of the data related to income statement part, which is from sales, and then COGS to other expenses. Okay, so no goodwill impairment loss already, you can omit the row. And then remember the income from roller, it is 36,000, you minus 2,000, it will become 34,000. Okay, so, or if you can directly take it from the trial balance. After you have done, again you go back to elimination entry to see which journal entries that will be put inside the elimination entries of income statement. Okay, so it's income from roller, and then all of amortized differential reclassification entry. Then you do the consolidated column. Okay, submit. Then remember to minus to add the number. Income will be always 0. And then if the consolidated net income is already equals to the parent company net income, then it is correct already. We can go to statement of retained earnings. So we take the beginning balance of the retained earnings from the question's trial balance. Okay, net income will be from the previous section. Then the dividends also from the question. And then you put the elimination entries related to statement of retained earnings, and then you go to consolidated column. Okay. If the ending balance is already equals to the parent company's ending balance, then we can go to balance sheet part. Just move the assets from cash until investment, and then accumulated depreciation. Remember, we have goodwill. Okay, and then for liabilities and stockholder security, just from accounts payable until common stock. Yeah, and retained earnings. So retained earnings will be always from the previous section. Okay, just remember to make it balanced first. After that, you can go to the elimination entries column. So you go back, okay, to take all of the entries that related to balance sheet column. So common stock, investment, and then all of differential reclassification entry, and then the accumulated depreciation entries. Okay, so you put all of it, and then you sum the debit credit column. Is it equal or not? If it is equal, then you can go to consolidated column. Okay, so you sum the numbers. Okay, and then for this will be always plus the debit side minus the credit side. And for accumulated depreciation, you minus the credit side, you plus the debit side. Okay, and then investment must be 0. The goodwill, you put it on positive amount. And then accounts payable and notes payable will be the same. Common stock and retained earnings will be the same, like the way you do usually. So if the total asset is already equals to the total liabilities and stockholder security, then it's just for the worksheet. So the additional question is about to prepare the consolidated balance sheet, income statement, and retained earnings statement. So because we are moving from income statement to balance sheet in the worksheet, so it's up to you also how you go with the flow. Okay, for my flow, I'm starting from income statement to statement of retained earnings, and then the consolidated balance sheet. Okay, sorry, this is consolidated statement retained earnings. Okay, so you just make a usual format of income statement. Okay, just take the data from the consolidated columns. Okay, so it is just a simple income statement format. Okay, this single step format. Okay, so sales minus COGS, you get gross profit. You minus all of the operating expenses, then you get consolidated net income. And then the consolidated statement of retained earnings, you start with the retained earnings at January 1st, 2009, and then again you put net income and then dividends, you minus it, you will get the increase in retained earnings, and then you sum it to get the ending balance of retained earnings. And then the consolidated balance sheet, again up to you. You want to do the T format or the list down format. Okay, so assets, will you put all of the assets, okay, except investment. Yeah, and then the amount is the consolidated amount. Okay, then you have total assets, and then liabilities and stockholder security. Just move all of from accounts payable to retained earnings. Okay, it's balanced and it's done.